a fair bit happening, isn't there? Rahul Sharma is joining us now, Head of Technicals and Derivatives Research at JM Financial Services, to chart the trends near, medium, and longer term for us. Rahul, great to have you with us here on CNBC TV 18. Thank you very much. How are things looking, Rahul? What is the primary trend now? Is it higher? Is it a little muddied now? Just kind of sort of let's start there.
Hi, Prashant. Looking at the recovery that was seen on the repo rate cut on Friday and Tuesday's one, is clearly suggesting that the internal breadth of the market has improved significantly. Around 56% of the Nifty components have shown big reversals, indicating that there is more legs to this upside that we've seen. Yes, a bit of a final leg of volatility may be there in the US markets, which could, keep us range bound for a bit. But I think this is a classic buy on dip market where market internals like Nifty has remained resilient throughout. And now, finally, with the US markets bottoming out, there is a good possibility that, we go on to test the all-time high on the Nifty, which is around 18,600. So I think the technical health of the market is pretty robust as of now. And, any dips could be used as buying opportunities. 17,000 should be a good re-entry level in case there is any correction in the near term. And overall, I think as long as we remain above the 16,640, which is the 50% retracement of the entire previous bull move from 15,200 to 18,000 odd, I think we should be, pretty strong in the uptrend. So the bias is positive. We're just heading into a small bit of resistance around 17,450, 17,500. So for this week, I think we should be done around that level. Post that, a bit of a cooling off or a pullback can be seen. Post which, we can expect another leg of rally to happen.
Going off to what kind of levels, Rahul?
Sorry, could not get you.
Rahul, cooling off to what levels? You said at about 17,450, maybe a bit of a profit booking and then a bit of a cool off. Cool off to what, you think?
Yeah, so cooling off could be around 250, 300 points on the Nifty. Somewhere around 17,200 is where we are looking, the cool off should happen, which should be again be a good re-entry point, a bit of re-entry at 7,200. And at max, if, global scenario gets stretched, around 1,700 should be a good level to enter longs.
Okay, so you're saying that this is a buy on dips market and, the technical setup is looking quite positive. Rahul, good morning. Tell us about which are the leaders that could take the markets ahead in the next leg of this rally, stock-wise?
Yeah, so one index which clearly stands out, like a Tollywood movie. I mean, there is a villain, phase where the index struggles a bit, and finally the leadership is back. Before the movie ends. I'm speaking of the Bank Nifty index. So this is the first index to reach the 50 DMA. The recovery has been quite robust, and so far in the last 3 odd sessions, where the recovery that we've seen is primarily on short covering. I think the fresh long addition is still yet to come. Banks are here to stay. I think the banking and financial space is one area which should continue to lead the rally. Apart from that, auto is one area where we feel that there is significant upside which can be had in this month. So talking of stocks, Bajaj Finance remains our top pick from the NBFC basket. ICICI Bank from the banking space, and from the auto basket, I think Maruti, the risk reward is pretty favorable for a 10% upside from current levels. So these are our top ideas. We believe overall the market should do well in the short to medium term, and October we are expecting the bias to remain positive, especially for the broader market.
Okay, all right. Hi Rahul, morning. You spoke about a movie and you talk about the heroes as well, but there's been a villain in there. That's the IT index. It's been a big underperformer. Do you see signs that that's going to be bottoming out? Would you go for a contra trade out there, or do you think there is still some correction left in it?
Yeah, Nigel. So the correction that we had, in the IT index has taken out the froth from the outperformance. So 2020 was a year where IT did extremely well, and the outperformance was there for everyone to see. Now that the outperformance has been taken out, we believe that the risk reward is pretty much favorable for a rebound in IT index as well. In fact, the last couple of weeks, the pattern that has been formed in IT index is suggesting that 26,000 is a very, very solid base for the IT index, and we should be looking for an immediate target of anywhere around 29,500 to 30,000. So IT as a sector, the risk reward is very favorable. It may be a slightly longer road to recovery, but we believe that the worst has been done for the IT index, and this has been the only major sector in the Nifty 50 basket, which has been an underperformer. So, that also is turning from neutral a few weeks back to, positive once again. So that all in all, good signs. Like 90% of the Nifty components are into a bullish territory, and that should bode well for a possible new all-time high in this month itself.
What other pockets of the market, Rahul? I mean, Mazagon Dock is, incredible move. 26th of September, Mazagon Dock was at $300, at 600 today. Just what a move it's seeing today and over the last just a few trading sessions, basically, six sessions in all, 300 to almost 600. Rahul, defense, right? Has been a huge outperformer this year so far. Your thoughts? If you still think they can do more from here, and which ones?
Yes, Prashant. So defense has been one of our favorite sectors, and two stocks which stand out clearly. One is Hindustan Aeronautics, and the other one is Bharat Dynamics. I think these stocks, still have around 15-20% upside left in these current setups, and we could very well see those happening in the next couple of months. So, Bharat Dynamics possibly a 1,000 rupee target, 1,050 target on the upside. HAL, I think, is another one which is there in the F&O space as well. So, this could very well head towards the 2,700, 2,750 mark. So, both. In fact, the sector is looking pretty solid. The charts are pretty robust, and the retracements that we've seen in the current correction, they hardly managed to break their 50-day moving averages, whereas the broader index was well below that. So this goes to show the inherent strength that is there in these underlying counters, and we believe that on this way up, we should be seeing good traction on the upside. So we remain bullish on both of them, Bharat Dynamics and Hindustan Aeronautics.
So you did mention a while back, Rahul, that you are bullish on the auto space, but it's been very different, the moves here, right? So this year, for example, Tata Motors is down about 20%, while Maruti is up 18%. Going forward, which are the outperformers and which are the stocks that could perhaps take a backseat?
Yes, so Maruti is something that we like, especially given the domestic exposure of the business and overall the domestic economy doing very well. Tata Motors has had headwinds regarding the issues with China and Europe, so obviously that would be one area where we'll be keenly watching on what the developments are. But as far as I think Maruti is concerned, like I shared, the risk rewards are pretty still trading around its 50-day moving average. The technical setup is suggesting that this stock could very well be headed for the 10,000 mark. So in the next couple of months, we'll not be surprised that the auto, which is actually having the time of its life, continues to do so, and the domestic players should benefit from that. Have a stop loss placed at around 5-6% from current levels. There's about 20% upside that can be had in something like a Maruti from current levels.
Okay, all right, Rahul. Thanks so much for stopping by and filling us in with your views. As you said, there's a bit of a buy on dips that's playing out, and that appears to be happening as well. A quick word on the index then. Today's day's high is around 17,429. We hit that level, we corrected close to 90 points. That initial dip has got bought into, so keep a marker out at 17,430. Once we get past that and can trade above that, maybe we'll see some bit of short covering, which then we run into that resistance zone of around $17,500. So limit to a short break. You come back, we'll turn our attention to the commodity markets. Manisha is waiting for us out there.